Hey guys, Mike Colantone here. Hope you are doing well. Today I want to talk about predicting the future. No, I don't have a crystal ball, but what I do have is some pretty hard factual data. And what you can do is take a look at it, see how it's affected our past, and how it will affect our future. I'm fortunate enough to have some access to some pretty cool tools. Thank you, Barry Habib with MBS Highway, for this information. And let's get into it. I want to take a look at what's happened in the past and what to expect in the future. All right, so for those who follow me pretty closely, you may have seen this on my Instagram or on my Facebook story. What this is it's a birth chart for our country from 1928 all the way to 2012, and it's segmented by generation from silent births, baby boomers, Gen Xers, millennials, post millennials, and you'll see that there's some over the course of history, there's been some ebbs and flows to the birth rate. And I'm just going to go into how this has affected our markets and how you can kind of use this information to predict the future. So the first spike that you'll see is from the silent births to the baby boomers, and this is when we saw as an economy. Businesses really take off and start to do more production. And as you can see with that baby boomer generation, the population grew tremendously, and that's where we got to see more work, more expansion. After the baby boomers section, you'll see that the birth it does go down a little bit. This could be, people usually say that this is because of birth control coming out, things like that. And then eventually you're going to go into the millennial and post millennial section and see that the birth rate is going up. So according to Zillow, the average first-time home buyer is around 33 years of age. So today's market, that would be someone born in 1986. How does this affect the housing market? Well, it's going to put more pressure on the price. It's going to make things more expensive due to lower inventory, because as more and more people enter the market, there's going to be less available homes for them. Before I go into more of what we're going to see into the future, you're going to see a dip in that Gen X area, somewhere around here. There's a significant dip. And if you take that same measurement of a 33-year-old in 1973, that would be equivalent to 2006. For those of you that don't know, this was the peak of the housing bubble. Obviously, there was other factors that were going on besides just a decline in new home buyers. Things like bad mortgages, they were doing some crazy things during 2006. But this is a huge key indicator as to why we saw that bubble or that crash in 2006, 2007, 8, that time period. All right, guys, so this is another chart here for you. And what this information is displaying is, in the blue, you're going to see household growth. And what that means is new buyers entering the market, first-time home buyers as it goes over the years. In the gold, you're going to see the amount of, it says annual completions, but basically new build homes during those same time periods. You're going to see how the blue and yellow changes and how it correlates with the years that we just talked about. All right, so remember what I said earlier about the 2006, 2007, 2008 bubble? Look at the chart here. Look how it's affected. You'll see that builders were just building more and more homes, but in the blue, there just wasn't enough people coming into the market. And this also had a huge effect on why we saw the crash, home prices decrease, and things like that. So now let's take a look at the other side of this. Here we are today, or getting closer to today. You're seeing more and more families coming into the market and not enough homes. So this explains why our market is so hot. It's so hard if you are in that medium average income range and trying to buy a medium average home price. It seems like things are going on and off the market in a second. And this is why, you see that there's more and more people entering the market and just not enough inventory. And let's go back to the births chart. You'll see the amount of income or new households that are coming into the market is going to increase, yet we are not seeing enough inventory in new builds home or just homes on the market. So for all the naysayers out there, the media, anyone who tells you differently, you can see that this evidence doesn't support that. And we are in a strong housing market, and home values are going to continue to rise, and so are the amount of homeowners entering the market. Even for those fearing a looming recession that they say is going to happen maybe sometime in 2020 or 2021, what happens to home prices is they actually stay pretty stable. So even though you're going to see less people wanting to buy a home because maybe they lost their job or fell on some hard times, what happens to interest rates during a recession is you're going to see those drop. So that's going to make it more affordable or easier for those that are stable enough to buy a home to buy a home at a higher price but have a less payment due to rates. So my message is this to all the people that are either on the fence about buying or have a negative thought process about the housing market is one, if you're thinking about buying, buy now, because you know the value of your home should increase over the next 6 or 7 years. Number two, if you're a current homeowner, expect to see the price of your home increase in value. So what does that mean? Maybe you could sell it and trade up, or maybe you could leverage the debt and use some of that value to pay off other debts. I hope this information was helpful for you guys. Please let me know any of your thoughts. Please comment below, suggest any future videos. Let's hear it. Let's see what you have to think. And I'd love to talk to you further about the future of our market and what's to come.